we decided to move this forward, and we thought, do this business right. That meant being built to last, which means let's think about it from a generational perspective.
That's what we're about. We're trying to gather the resources here to accomplish anything that a family needs to be successful.
A firm is built on the reputation of the individuals. It's about the people.
When you got great people, then I think your chances of being successful are pretty darn good.
It's more about helping somebody else grow. I'm not just talking about clients, but helping the others that have committed their careers here to get better. If you don't have happy colleagues, you're not going to have happy clients. It's as simple as that.
The key is to do really good work for the clients and to be transparent and to be honest and ethical. And if you do that, everything else falls into place.
A firm is built on the reputation of the individuals. Especially when you start, you got to have the right folks together.
I started out my career on Wall Street before I went to Vanderbilt as the Chief Investment Officer.
My prior employer was a bank. I had a strange trio of background and experiences, which ultimately was very helpful to me at the early days of Diversified Trust. I started my career at Goldman Sachs and got to see the investment world from the institutional side, if you will.
Larry Bryan and I knew each other through some contacts here in Memphis.
I'd heard the name Larry Bryan. Larry Bryan and I met when he first moved to Memphis.
I would call him the founder of the firm, although there were several other founders. He was our first CEO.
His idea for this firm was, I thought, just spot on. He did a magnificent job putting, the right group of people together.
My background is at a major hospital. I was fortunate to get an opportunity to be a hospital CFO at 28. We were a very, very successful organization, did wonderful things for the kids of the Mid-South. But by the late 80s, healthcare was becoming less fun. So I started looking around at just what else what I want to do the rest of my career. And I'd been fortunate to get to know Bill Spitz through some mutual friends.
We were both having the same experience. People were coming to me all the time saying, I don't really know where to put my money. I don't like brokers. I don't like banks. I'm suspicious of these organizations. He was having exactly the same experience at Le Bonheur. The doctors were coming to him saying, where can I put my money?
I was in Nashville for a meeting one day, and I called Bill to say, you got time for me to come by and visit with you for a minute?
We put our heads together and we said, there's an opportunity here.
Bill's the one who said, I think you ought to help start a trust company. And because of Larry's respect for Bill, he simply just said, great, what's a trust company?
I suggested that we do it in the form of a trust company because that would give us the ability to work with multi-generational families, to be trustee, to be executor, and all those sorts of things.
He explained it to me. Then he threw me the ultimate curveball. He said, Larry, you'd be the perfect person to start something like this. So I called Hal. He and I visited about my conversation with Bill.
I just stopped him cold right in the middle of his spiel. And I said, I don't know if you're asking us to be shareholders or clients, but the answer to both questions is yes. What's next? What do we do now?
It kind of hit me that, hey, Larry, you're about to start a trust company and you don't know anything about trust. So we got to find somebody that's got a trust background, but they've got to fit into an entrepreneurial type organization.
Sam was a fairly young trust officer at a large bank here in town.
One of the people that I worked with at EY back in the day called me and said, have you heard? Larry just told his board that he's resigning in 6 months. He and a guy named Bill Spitz are talking about starting a trust company. We have lunch. He tells me how he thinks that I should help them do this. I have to admit, I was a little nervous because I just had a newborn and a pretty good job. And they were asking me to come to something that was just written out on one piece of yellow dog notebook paper. Bill seemed to like what I said. They were going to trust me to figure it out, which was scary as can be. He
accepted our offer to come work for a startup company with no assets. So he took a huge risk, and I've always admired him for doing that. We needed two things to start this company. We needed a certain amount of capital, and we needed credibility.
Getting in 94, I was 40, Sam was 31, Hal was in his 30s, Bill was early 40s.
What we chose to do was to pick outside, well-to-do individuals and families around the Southeast who were willing to put up some capital. For them to lend their name to a startup organization, I thought was a pretty courageous thing to do. And I think the reason they did it was because of Larry and Hal, and to some extent to me. We were all people that had some amount of credibility in the world, and they were willing to hitch themselves to our wagon.
A lot of times people start companies with the idea, let's get it to a certain point of success, sell it, then a few founders can go do what they want to do past that, and that was just not our vision. The basic premise early on the investment side was invest your money like the big boys and girls do. Invest my money the same way that people more like a Vanderbilt invest theirs.
We were able to provide access to top-tier institutional money managers with very large minimums, and yet allow our clients to access all of that with smaller amounts of money.
People who are trained in investments spend a lot of time learning about math and accounting and statistics and interest rates and economics and all those sort of things. And over time, I've come to realize, that's all there. But I've come to realize that the human dimension of it is much more important than I ever understood.
To me, it's always all about the client.
Hal made a statement that resonated with me instantly and has stayed with me. He said, Sam, we're going to be in the relationship business.
We were in a relationship with each other, we're in a relationship with our clients, and those have been lifelong relationships, and now we have relationships with those clients, children and grandchildren.
When you start working with a client, let's think about it from a generational perspective, not only today, but 10 years from now, 25 years from now, 50 years from now. It's a marathon, not a sprint.
We're trying to improve the financial lives of our clients. Well, what is it they're trying to accomplish? Why is it that we all want to make more money? That's what we're about. We're trying to gather the resources here to accomplish anything that a family needs to be successful.
They entrusted us with a whole lot.
Everything they've built for their whole lifetime. That's one of the highest callings somebody can have, is to try their best to do what someone who's no longer here wants done for their wife, their husband, their children, their grandchildren, and ask you to execute things after they're gone. It's about helping somebody else grow, helping somebody else get better. I'm not just talking about clients, but helping the others that have committed their careers here to get better. It's incredibly moving to see the quality of talent that has joined our firm.
Obviously, you've got to have smart people. I want people that have achieved a lot in school, people that have achieved a lot in life other than just their work life, people that care. And you look for little signs. When I was in management and we would interview someone, first thing I'd do after they left would be to go up to our receptionist and ask the question, how did they treat you? Because if they didn't treat that person properly, then they're not going to fit at Diversified.
The founders have to model that. As you bring in new employees, new colleagues, they see that, they sense that, they become culture carriers. You can bring folks into your organization once you know that's a fit, the growth, the new clients, the business part of it. That'll take care of itself. So we open offices around people.
It's not about, we want to be in fill-in-the-blank city, plant a flag, and let's go find some good people. It's, let's find good people. Where are they located? Let's expand there.
We never opened a second or a third or fourth or fifth office just because we thought we needed another office or because we had to be that much bigger. We opened it because we found people who shared our values, who we knew were fiduciaries, not just because they said it, but after getting to know them, we knew they were fiduciaries here.
We will do well here if our clients do well over time. And every employee in this firm sort of buys into the culture here. They know that if they do a good job, they will do well over time. And our ownership model promotes that.
It's all about relationships. First 10 years of Diversified, we had a group of non-employee shareholders. And bringing in a group of non-employee shareholders who were all very successful in their own right, that really added that credibility. And we felt like that it was an opportune time to transition to a 100% employee-owned. I told the outside shareholders at the time, I said, we will not do this unless we believe as friends. 10 years in, we bought out the founding shareholders. They all remain friends. I think they've gotten a good return on their investment, which is what we wanted to provide.
We have, I think, 104 employees and 67 of them own stock in the company. That's extraordinary. There are almost no other organizations like that.
When we're private, we get to make every decision based on what's best for, the long-term future of the firm.
In 2008, our revenues here were down probably 25%, yet we increased our employee base by 25%.
We did not pay bonuses. We said, we're going to protect those that are not at the high end and help them get through it and not make them be part of that significant sacrifice.
We never changed what we were doing. It never drove us to the transactional side of the business. We just kept doing exactly what we were doing. We had faith in what we were doing. We never dreamed this company would be this big.
Heck, we're sitting here, managing almost $9 billion of our clients' money.
The thing I'm most proud of now after 30 years is that I've never seen anyone in this firm do anything but the right thing for clients, for employees, and so on. And that's an awfully nice thing to be able to say.
Honesty is the bedrock, and integrity is the bedrock. If you don't have that, nothing else matters. We're in the relationship business, and that means our reputation means everything.
The key is to do really good work for the clients and to be transparent and to be honest and ethical. And if you do that, everything else falls into place.
It feels overwhelming to see where we are today.
I'm very excited about the future because I look at the next 2 generations that we have of employees here and how powerful and strong and extraordinary they are.
The thing I'm most proud of is that the values that Larry and Sam and Bill and I all talked about on day one are still intact.
We didn't get there the way I thought we'd get there, but we got there.
Doing the right thing, helping clients achieve their goals, being proud of the people you're sitting in the room with.
We just got to keep hiring the right people and training people properly.
The growth prospects for this firm have never been better.
I think this could continue for a long time.
I think our best days are still ahead.
I'm very optimistic.
I can't wait to see what happens in the next 30 years.